What's up, YouTube? It's Joe Ketchpalia sitting on the couch making some money investing in fractional real estate online as usual. Today we're talking about Mogul's first multifamily property listing. It's the Buffett, and they said that's named after Jimmy Buffett, not Warren Buffett, which is unfortunate because I'd much rather have investment that was named after Warren Buffett, but you know, whatever. This is a fourplex in Cape Coral, Florida. And let's see, what are we going to talk about this? So one, if you're waiting on a video for the Hughes, I am still planning to do that. That's their pad split in Mesa, Arizona. It's just not selling out nearly as fast as the Buffett is. The Buffett launched at last night's webinar, and it's more than 2/3 sold out already. And so I just wanted to get something out there before that happens. I know a lot of people get excited, new product. A lot of people have been waiting for multifamily. There's a whole bunch to like about this. It's listed as core with a 10% average yield, 11.1% IRR. This is, I believe, the lowest return projection that we've seen on any Mogul property. But it's the first one that I think is really properly characterized as a core investment. And, you know, core is supposed to be safer, more stable, buying in-place income. And, you know, this is a fourplex that has, 100% rented. They mentioned that the average tenancy in this rental is 5 years, which is, maybe there's somebody who's been in there since 1986 and that's bringing it way up. You never know. But regardless, that's a very long average tenancy for apartments. It's also, they had the roof and the HVAC replaced, since 2020. So I don't know, sometime in the last 6 years. So they're expecting relatively low expenses, stable income. That fits very squarely into what I think of as core. When I compare that to some of the, especially short-term rentals that are listed as core, just blows my mind, because of the variability in the income. But anyway, or the variability, I don't know. I should have went to bed a long time ago, but I'm trying to get some videos out and I was doing some research. So let's see what else we can talk about with this. This is the first time we're looking at this market, at least that I remember. It is, in South Florida, probably, maybe mid, I don't know. I don't know how you guys break up that state. I haven't been there in quite a while. But if you look at the growth rate, it's not a huge city, but it is, it's a big enough MSA. If you guys remember, I always like to be in, this is just the city, not the MSA. So, it's almost 200,000 people city. I actually think I read somewhere that it was the 8th largest in Florida. I'm not 100% sure about that. But if you look at that growth rate, it is unbelievable, right? Their population growth has been fantastic. And then I looked at the MSA, and the MSA's population growth looks really strong as well. So that's the number one thing that I look for residential properties. And so obviously there's a whole bunch of other things about the market that you should look into. But for me, that checks one of the big boxes as far as on the demand side. There's clearly, demand for housing now. Obviously, it takes a lot more work to figure out the supply side, which is why, it's not the whole picture, but it is, especially when you see rates that are that high. It makes me bullish on that market. It's also, Florida's a very landlord-friendly state with, or property owner, property rights type state relative to a lot of the others out there. So it's a place I want to own long-term. It's a place that's growing. I checked out the FEMA flood map, and I am going to try to get through this really quickly because I don't have a ton of time right now. But I wanted to get a video out before they were completely sold out. The flood map looked good. If you were concerned about it, we haven't looked at this risk index tool in a while. It's actually changed quite a bit. I was surprised that it had this area as yellow, which is, if you look at the legend, relatively moderate risk of natural disasters overall. Now, obviously, why am I looking at this map? Because this is an area where, you're going to just have a lot of hurricanes, right? And so, can I add the hurricane track? 1990s plus. Do I have to get rid of the other one to be able to see that? I don't know. Nope, I don't need that. But I was just, if I shut that off, I don't know. Anyway, this is one I haven't played with much lately. They changed a whole bunch of stuff about it. Oh, okay, these are the hurricane tracks. When you zoom out, we can see all these hurricane tracks. So obviously, it's not... this is, I think I've heard this area referred to as Hurricane Alley, or it's relatively close to it. Although one of the things that Mogul mentioned in their webinar is that they... there hasn't been a insurance claim on this property since the current owner had it, which went back pretty far, which is a good sign, right? Like that it hasn't. I mean, I don't know if past experience with hurricanes indicates anything, but it hasn't it hasn't flooded. It's not in the floodplain. For being in an area that has a lot of hurricanes, they did the due diligence that I think that you can for it, right? What else do I want to say about this property? When you looked at in the neighborhood, their marketing pictures for this are fantastic, right? It makes it look really luxurious. When you go up and down the neighborhood, it's more what I expect a bunch of fourplexes in a certain area to look like. You got people parking on the lawn, but it's a relatively nice multifamily neighborhood. There's not. I didn't see signs of graffiti or stuff being broken or whatnot. Although, I didn't spend too much time on this because, again, just trying to get something out. One of the things, we always concerned about is the valuation side. So looking at the third-party websites, okay, the Zestimate is $631,000. What was our purchase price? $635,000. So that actually looks pretty good, right? If you look on Realtor.com, though, they've got an estimate of $576,000. Now, one of the things that I wanted to mention is for multifamily, these websites are notoriously terrible. They just don't. Look at. I don't know what's going on there. I think this is so. The guys at Mogul had mentioned this property had been part of a portfolio. I kind of wonder if at some point in time this was picking up that combined listing, and that's why. I don't know if that's what's happening there, but that's crazy that had that big jump. Redfin, it sold. Okay, it sold in June 2010 for $118,000. That's crazy. Is that the last sale? But what I wanted to talk about here, Redfin's estimate $675,000. And okay, well, where's that number coming from? Oh, no, I'm looking at the wrong one. Sorry, let me go back here. The Redfin's estimate $453,000, which seems crazy low. But again, I think these are often problematic. But when I was looking, I actually found this comp here and that's what I'm showing you here. This actually sold in May of 2025 for $675,000. This isn't the subject property. This is a different property, but it's pretty close by, and it appears to be the same floor plan, right? Okay, if you look at what we have 8 bedrooms, 8 baths, and they're saying 4,100 square feet. This is 8 bedrooms, 8 baths, 4,076 square feet. And if you look at the exterior, it looks extremely similar build to what we have going on here. Obviously we have a different color scheme and whatnot. But this, it basically, to me, looks like they sold the same property, a very comparable sale for $675,000. If that's the case, I'm looking at the wrong one. This is one of the best discounts that we've seen, and this is an off-market transaction. And they said they had been working on it for a while, and they had been, with a seller that had been trying to sell a whole portfolio. So it seems like this is, from a basis perspective, one of their best deals that I've seen. Now, obviously, and actually, these are these are the listings. They're saying these are other fourplexes. I didn't actually pull these up. You might want to do that if you're going to invest in these. But that just seeing that one comp made me feel real good about this, right? I mean, now obviously there could be more to the story, why this one was worth more. Those are things you always want to dig into. But that's, finding one that seems like a true comp, so close by, and that's significantly more than what we're paying. I mean, this is $40,000. This sold for $40,000 more a year ago. Oh, and that's one of the things that I didn't actually look up yet. Have property values gone down in this market over the last year? Let's take a quick look. Somehow that's the tab that I'm always doing while recording. Price trends. Sorry, I didn't get that out there sooner. Okay, so prices did go down over the last year. In this market, oh, that is a steep decline. So we're used to seeing this shape, but this is the steepest decline. So yeah, maybe it should be cheaper than last year's, and maybe it should be even cheaper than that, if you look. But one of the things that to keep in mind is this is, the home price index. Can I do single family? Yeah, see, I don't even have the option to separate this for fourplexes. They don't necessarily follow the trend line exactly in certain areas because it's, most of the time you often get investors that buy these, not just owner occupants. So I don't know, maybe it's not as great of a deal from a basis perspective as you might think, because, this market's gone down almost 10%. This is one of the first ones I've seen in a while where Zillow is also predicting it to continue to move down over the next year, versus turning the corner and coming back up. As I've always, I've mentioned a bunch of times, I think it's highly dependent on what happens with interest rates. If you haven't been paying attention, they did drop below 6% for the first time in 3 years this week. So I think that'll impact all of them, but this is at least useful info from a relative pricing standpoint, right? Like if we're going to compare this market to other markets. So regardless, I'm perfectly happy with this purchase price, because purely because of the one comp from last year, because of because it's just so similar, and also even Zillow's estimate is not too far off, but I even though these other ones are pretty far, I just don't really trust them when it comes to multifamily nearly as much as I do when it's single family homes. So what else? And the other thing, I did check out the rentometer just to get a sense of are the rents that we're looking at does it make sense, right? I wanted to try to back up their projections. One of the things that they mentioned in their webinar was that they are what are they? That their top line revenue is actually $4,000 lower than what they actually collected last year. So the trailing 12 number was $4,000 higher, is what I believe they said. You can look in our Discord too. There was some discussion about that comment, and I think they'll verify that. Unless I could be thinking that they were talking about something different. So you might want to look in there just to be sure. Before I forget, please like and subscribe. In the description of this video, you'll see links to all the places where I'm currently investing in fractional real estate online. Mogul being one of those places. If you use the referral links, some of them give you money. Lofty has said that theirs is live again, so hopefully that works. I wonder if I have to update my link. I'm not sure. If anybody knows, let me know. Also in the description of this video. I have those there, but you want to do your own due diligence. One, on the terms of service, and what you actually have to do to qualify for the referral bonuses, because some of them you have to make a certain investment. It has to be within a certain period of time. in that. But you also, more importantly, do your own due diligence on the platforms themselves and on any properties that you want to invest in on there. Because just because I'm buying from these and putting my money on some of these platforms doesn't mean that you should. Some of them I'm working on getting my money off, and some of them I only put it on for the bonus money. And so you want to really make sure you understand what you're getting into. Don't just buy stuff because I do. Please don't do that. Also in the description of this video, I have a link to the Discord, where it's just a generic fractional real estate investors Discord. It's not a sales funnel. It doesn't cost you anything. You might get DMs from fake people that are pretending to be me. They're not me. I'm never trying to sell you anything in the DMs or. But there's over 200 investors on a regular basis, visiting that channel and just talking about these properties, sharing due diligence, talking about different strategies. And, most of them are lurkers, right? But feel free to join that. Okay, so back to this. There was a discussion in that Discord that I just mentioned about what was said in the webinar. And I think they confirmed that this is actually $4,000 below the trailing 12. So probably they're doing that because if you have some turnover, you could have some, a little dip there. But so levered cash on cash year one, this is the smallest number we've seen from them, right? 7.3. But if you think about it and you compare this to really any of the other platforms that are doing long-term rentals, this is a better, a better yields than, with the exception of some of like the real, some of the ones on Lofty where there's the co-owner paying the mortgage and whatnot. But in general, this yield, if they actually can hit these numbers, will be a fantastic yield relative to a lot of the other comparable properties, right? On other fractional real estate platforms. And so, I don't know. I like it a lot. I think that I'm going to buy a piece of this one. I actually have to move money into my fractional account first because so I don't know if I'll be able to get it in there and buy a piece before this is sold out because it's selling out so quickly, but I'll do that this morning and we'll see what happens. So it's funny, I hadn't bought anything from them in a while, and then I recently bought a piece of one, and then I think I'm going to buy a piece of this one too. Do I really want to? I don't know. One of the things, if you've done some additional due diligence and you think I'm missing some stuff, please let me know. Oh, this was one of the interesting things that I noticed. It's financed with a 5.99% interest-only loan, right? This is the lowest interest rate we've seen on one of their deals as well. That is the other thing I always like to do, and I didn't do, is shut off the refinance assumptions. And then how ugly does that make this deal? Doesn't change the average yield at all. That's interesting. Changes the IRR about 0.5%. So not too bad. Anyway, if you think I missed anything important in this video, please let me know, because this is very rushed. If you're buying a piece of this and you want to share some other reasons why, I'm interested in that. And if you think that there's things that we should know about and not buy it, well, I didn't pull the trigger just yet, so let me know. That would be awesome. And that's the whole goal here, right? Sharing what I'm doing, sharing my thoughts, hoping that other people do as well. And I do appreciate Brad and Ike are always real active in the Mogul thread. Other people as well, but I think those are the two most active people sharing some info. I know we had a couple other people jump in there today too. I think the more we can do that, the better off we'll all be as a community. But that's really it for me for today. You will see a couple other videos because I am going to try to get this one for the Hughes done, but that might be later tonight. I've got my I know I owe you one on how my Mogul portfolio is performing, and that'll be coming out soon as well. Anyway, until next time, I'm going to just keep making mistakes so that you don't have to.